Rick Jensen, fellow client of Dan White & Associates, financial consultants specializing in retirement income, here with Ed Slentz. Ed, you work for the federal government. I would think that with all your retirement and pensions and all, a federal government employee wouldn't need to talk with someone like Dan White. Why do you?
Basically, what happened was in 2009, we had investments that we were pleased with, and then the market crashed. And my former advisor kept saying, stay the course. I was getting quarterly returns that were very distressing. We received a note from Dan White inviting us to a dinner at Delaware Town Inn. He explained it in a way that we could protect our principal and still have the opportunity to earn some interest, and there would be peace of mind. We wouldn't be getting the quarterly reports with the distressing figures, and we're very pleased. We've been involved with Dan for the last 10 plus years, and so we're very pleased with what we have.
I think you'll be pleased too. Dan White & Associates. Give him a call, 888-690-8820, 888-690-8820. Dan White & Associates. Plan and protect your future now.
Listen to On the Money with Dan White, Sunday mornings at 7 on WDEL.
Following segment is sponsored by Daniel A. White and Associates and does not necessarily reflect the views of this station or Forever Media Incorporated. Rick Jensen on 1150 AM, 1017 FM, WDEL.
Well, it oughta. Yeah, it should. I've been a client of Dan White's for many, many years. Great guy, smart guy, and a straight shooter. Financial planner specializing in retirement income. Dan, thanks for being on, buddy.
Thanks for having me, Rick.
Yeah, you have some great advice about 401ks and IRAs, whether people should, flip over to a different type of IRA, what is a self-directed and all that shit. What are some of the other questions you get about IRAs?
Yeah, it's kind of interesting. When it comes to taxes and the 10% early withdrawal penalties, we always tell people don't allow the underlying investments within an IRA to confuse what is applicable. I mean, earnings within an IRA are earnings. It doesn't matter if it was appreciation, capital gains, dividends, rent, annuity income, interest, or any other form of growth. If it's within an IRA, it's earnings. And as such, when those earnings are withdrawn, regardless of how you earned the money, they're all going to be taxed the same. They're all going to be taxed as ordinary income. And if those earnings are withdrawn before 59.5, unless you have one of the exceptions, they're also going to get hit with a 10% penalty. Okay, now technically the 10% penalty is referred to as an additional tax, but a punch in the nose is a punch in the nose, whether it's a right fist or a left fist.
Yeah, right. I mean? Yeah.
So there's no special types of earnings within an IRA that can avoid taxes or the 10% penalty if you withdraw it early. And I'll give you an example. Occasionally, and this is kind of silly, we run into people who might have bought a municipal bond inside of an IRA. Right? So they figure, well, municipal bonds, the interest is tax exempt. Well, not so when it's within an IRA. I mean, when it's in an IRA, when you take money out, you're going to pay tax on it.
Really?
So it doesn't matter whether it's tax exempt or not. If it's inside an IRA account, IRAs are already tax exempt. You can't double up the tax exemption with a muni bond.
That would be confusing anyway. I mean, really. So let's say you've got, real estate. Okay. Let's say it's capital gains. And just say your capital gains rate's lower than your regular. All right.
Yep.
So you got that, and they got the muni bonds, and that. Who's going to go through every year and calculate? Okay, here's how much I got on the municipal bonds. Here's what I got. That would be a nightmare to me.
And it really comes into play with your IRA money versus your non-IRA money. When you talk about people who really dig into the weeds and they want to do what's called tax loss harvesting. So in other words, if you have losses in some of your accounts, you can sell them, recognize the loss, and then offset it if you sold something with a gain. And that way, you're minimizing the tax on the gains that you're paying. But you can only do that in accounts that are not IRA accounts. You can't tax loss harvest in IRAs. I mean, if you have a loss in an IRA and you sell something, guess what? It's a loss.
Tax loss harvest. Whoever made that up had to be like a bean farmer in Sussex County that got their CPA. I know, we'll call it a tax loss harvest. We're going to harvest some money here. Hell? Dude.
I mean, that's what they do. But that's got to be done in non-IRA accounts, because if you sell something in an IRA and you have a gain, or you sell something and you have a loss, it doesn't really matter, because you're not going to recognize gains or losses within an IRA. When the IRA gets distributed, you're going to pay tax on it as ordinary income. There's no ifs, ands, or buts about it.
Right. So if you put, let's say, $100,000 in and you screw it up and it's only worth $50,000, you're spending taxes. I mean, you're paying taxes on that $50,000.
Right. I mean, you can't use that $50,000 loss on your return or anything. No.
Yeah.
Now, if it was not in an IRA and you had $100,000 and now it's worth $50,000 and you sell it, now you've got $50,000 of loss on the books. If you sell something for a $50,000 gain, you can offset that loss versus the gain. If it's a capital gain or a capital loss. If you don't have any capital gains to offset a capital loss, then you can carry forward $3,000 a year and offset that against your ordinary income.
Anybody who's driving right now listening to this and saying, wow, this is fascinating, you should get a degree. You know? And this is why there's guys like Dan White, as well as accountants and CPAs and tax attorneys, people who actually live through this stuff. Thank God I'm not in that world. But it's really important to know, because you'll have somebody, Dan, like you said, who wants to put different kinds of investments into the IRA. You might as well just, if you want to buy a municipal bond, you might as well just do that. And by the way, those can be dangerous as well, too. I remember my mom had some muni bonds out there in California. I think one was for like a public playground and a park and things like that.
Yeah.
The problem is that those municipalities got into financial trouble, and the value of those bonds went down. She couldn't sell them. No one was going to buy them. And that became a real problem.
No, yeah, it happens. I mean, everybody thinks municipalities and all are safe, but just like corporations, they can be mismanaged as well. So
you think?
Yeah. So you really got to look under the hood and see what you're buying. So.
Yeah, no, so it's good to know. Thank you, Dan White, financial planner specializing in retirement income. You can call him at 888-690-8820. 888-690-8820. His office in Middletown, as well as right over the border, Route 202 in the PA, and host of On the Money, 7 a.m. Sundays. So a cup of coffee, get yourself a little breakfast, listen to Dan. What's in the program this Sunday?
Well, this topic Sunday might be a little bit alarming. If you're one of those people that are collecting a pension, pensions for a long time have been underfunded, whether they're private pensions or even some of the states. So we're going to talk about the never-ending pension crisis and what you really need to be looking at if you're collecting a pension. You need to be looking at the funding ratio of that pension, see how solvent that pension actually is going to be.
You know, it's interesting you mentioned that. I remember where I read a couple and shared a couple studies, deep studies, on this problem all around the country. And I was quite shocked in reading some of the decisions and opinions of these authors who are very, very educated economists, saying that, oh, Delaware, you should be okay because you're not as bad as Illinois. It's like, wait, what? Yeah, it's like there's shortfalls all over. But because our shortfall is not as bad as other states, which are in terminal free fall with funding their pensions, that we're going to be okay. Yeah, I want to hear this. Sunday morning at 7 o'clock.
Yeah, it's kind of interesting. It's kind of like when the market crashed back in 08, 09, and the market went down 57%. People were like, well, I only lost 30.
Yeah, right.
Like,
I remember that.
You're happy with losing 30% of your nest egg? I mean, that's not a good thing either. So.
Never. And I remember you and I were talking about some small municipalities. There was one or two in New Jersey, many in California, that were defaulting. They were not able to pay the pensions to the people who were retired. I mean, Dan, you had people who were like 80 years old, and the municipality said, we're bankrupt, we can no longer pay your pension. And they're going like, oh, I'll just go back to the workforce. I'm 85. What the heck?
Yeah,
right.
Exactly. I mean, you got like firefighters and cops and that type of thing. And that's a scary thing.
Yeah, well, man, suit up because the pensions run out. The municipality's broke. That's unbelievable. All right, my friend.
Yeah.
Right. Thank you, Dan.
You're welcome, Rick.
Go Phils. Wait.
Have a great day.
Okay.
Yeah, go next year.
I know, right?
We'll get them next year.
Exactly. Take care, pal. Yeah, we often say go Phils. And right now it's like, oh, yeah, they're gone. Right. Dan White, give him a call at 888-690-8820.